Hey guys, Eddie the insurance guy. We're here today with Tony. Tony, tell us a little bit about yourself.
Yeah, so Tony Veteto, TIG Alliance. Eddie works with us. We are a membership-based independent insurance agency group. So our kind of what I do is we try to help our members have the resources they need to grow and develop their insurance agencies and serve clients and businesses and things like that. Thanks for having me here.
No problem. So we're going to go over a bunch of different topics, including the insurance market, the different types of insurance agents, and lots more. So stay tuned. So if you're like at Starbucks and you share their Wi-Fi, if somebody was sharing the Wi-Fi and like hacked into like Starbucks or any other place, right? It could be any like public place. Well, now they have access to everybody that's on the network.
Right.
Imagine if you're doing work in a public place.
You're totally exposed. You could be totally exposed.
Yeah.
Yeah, I mean, I think what's fundamentally crazy, and I mean, I know we're going to jump into the meat of this conversation, but what is so different, I think, about this last year, right, with OpenAI and ChatGPT, these models, these large language models, things they've been kind of developing for the last number of years, but they weren't really unleashed into the public consciousness until recently, right? But because it mimics and it's been trained on human speech and all of our human content that we've been putting online for 20 plus years, it's like crazy, right? Because you're like, whoa, this is it seems really smart because it's speaking to me, it's giving me responses in a logical way that Eddie might give me a response. Like, this is mind-blowing stuff, you know? And then like all the generative AI imagery, like with DALL-E and Midjourney and all that stuff. Dude, the stuff that used to take graphic designers, you know, I mean, graphic designers and all the marketing people, all those specialties are still highly, highly needed, right? It just, these tools enhance everybody's things, capabilities. But to your point, like, everything is digital exhaust. I mean, everything that we do, everywhere we go, it's crazy. It's crazy. But there's going to be, like a car, right? Somebody's going to hit and kill somebody. The Tesla is going to drag a pedestrian, or the Chevy Cruze or whatever. They're going to drag a pedestrian because the algorithm doesn't pick it up quick enough. But the majority of the time, they're going to actually drive people where they need to go autonomously without a hitch, and it's just like magic.
Yeah, it's Terminator 2.
Yeah, it's crazy. It's crazy.
Well, so like on social media, I've been seeing a lot of like mock debates between different like presidential candidates. So they'll take a picture of them, and then through AI, like they make them do all kinds of stuff, right? They got the voice, and the voice they can through AI, like copy it and stuff. So I started getting a bunch of calls, like on my cell phone. It says spam, 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 but I get a ton of them, and I'll answer, and then they hang up. So then I just started thinking, like, are they just trying to record my voice so that later on they could use it? Like, yeah, it's freaky. Like, it got me thinking about all these things, and I'm kind of paranoid. Like,
you never know. I think for us as a society and consumers, business owners, we're not quite ready. We've been inundated with like social media and spam, right, forever, this last number of years, but I don't think we're ready for the scale and the volume of messaging that's going to be coming at all of us, because that's going to look so legit. Like scam stuff, like, oh, I'm the prince I got $10 million from the prince of, some African nation, and I need you to email me your routing number. Like those rudimentary old hack emails, that stuff is, like, those were always bad to begin with, like you could, easy to detect. But now it's like, I think with deepfake video, deepfake audio, the generative AI imagery, like, there's crazy stuff. I mean, it's so many cool things, but I think just, again, it's just gonna change. We just don't know how society's gonna change, right? What the impact's gonna be.
So something that I recently learned. Um, so Chat GPT stopped learning back in 2020,
2021.
2021.
Mhm.
So think about it. All
And
the
it's not,
stuff
that's
that
not the case anymore.
okay, but so unless it's connected to the internet, everything that ChatGPT knows is 2, 3 years old.
So just last week, OpenAI had their Open Dev Day, and Sam Altman, who's the founder, right? They are going to be, it's refreshed as of April, I believe April of 2023, all the data. Plus they have now live web connection. So um, that limitation, right, which in a way was a good limitation,
Yeah.
but that limitation is gone at this point. And ChatGPT is building out little GPTs, so they're little app-based things, so anybody can start to build their own little mini functional ChatGPT versions for different applications. Like there's so many amazing things that are happening there. But anyway, sorry, I didn't mean to interrupt
No,
you,
it's good.
but yeah.
So,
Yeah.
so one of the things that I always enjoy talking to you about is that you have such a wealth of knowledge in a lot of different areas, and you're a student. You enjoy like learning new things. So the way that we met is through insurance.
Yes. Yeah. Yeah.
So tell us how.
The sexy world of insurance, baby.
Tell us like how did you get it? Like I know insurance wasn't my first like, oh, I want to grow up and be an insurance agent. How did you get started?
Yeah, dude. So I was one of those random few people that actually in the world actually thought I was going to be in insurance.
Wow.
So the very nutshell short version, my grandfather and his two partners had an independent insurance agency, right? And in a bit we can talk about the difference between an independent agent versus a captive agent like a farmer's or something. So my grandfather and his partners had an independent agency in Oceanside, a very successful commercial agency. They all, when I was a little kid, they all sold, retired, did their thing. My dad was a producer, broker there, and he decided, hey, I'm going to do my own thing. In retrospect, he probably should have just stayed with the firm and the agency, and he probably would have done better. But he formed his own independent agency when I was young. And so as I was growing up, back in the 80s, so like, again, this is not going to mean anything to anybody listening to this, but when Proposition 103 passed, right, in the late 1980s, which was the major insurance reform law here in California for auto and home and business insurance, that I was, at that time, I was picking staples out of the carpet, filing mail, like, you know, we had like 12 filing cabinets. None of us insurance agencies have filing, well, very few of us have filing cabinets anymore, right? Most of everything's life is digital. And so through junior high school, I was like, this is what I want to do. I'm going to just take over this business someday. So in life, we go through lots of different ups and downs, and we learn a lot through that process. Mostly in the downs, we learn the most. I remember a day, we'll call it a Tuesday at 3 in the afternoon. I'm picking staples out of the carpet, filing some mail, and the front door of the office opens, and it's the Department of Insurance, it's the IRS. And learn the lesson that you pay your payroll taxes, right? So my dreams of owning an independent agency went away that day. And so a hard lesson that I learned early on was you need to stay on the right side, you know, of the regulations. And so that kind of took me away from the dream or the vision of actually taking over my dad's independent agency. And ended up starting a carpet cleaning business, restoration, water damage restoration business. Did that for a number of years, then got married. My wife and I decided to go back to school, and then I got my degree in finance and came back to San Diego. And my boss, Steve Tague Insurance, he'd known me since kindergarten, and so I wanted to do like investment. Yeah, dude, he's known me my whole life. So I wanted to do investments. That's what I wanted to do originally. in 2002 when I started. And, you know, it was post 9/11, market was terrible, recession, it was just bad, right? So about a year into doing investments there at TAG, I decided like to go into the actual property and casualty side, so the auto and home and business side. And that was 20 something years ago, you know, and then a couple of years after that, we formed the master agency to help member agents start their independent agents. And then that's been the journey I've been on, dude, ever since. So it's crazy. Anyway, that's more than a nutshell answer.
I think that a lot of us in the insurance industry, like we're numbers people. Like we enjoy numbers. Like in life insurance, right? So we don't refer to life insurance as an insurance policy. It's a solution.
Right.
Right. It's a solution.
Right.
And it's numbers. You know, like we're looking at numbers, we're crunching numbers to find the right solution for the individual client. You know.
Yeah.
So I think we all share that. We're all numbers people. When I was in high school, like I wanted to be a lawyer, but I don't like reading, and my English still is like it's not the greatest. Like, it's so when I was at home, like our first language was Spanish, so I grew up speaking Spanish. I didn't learn English until I started school, and I was one of those that went to the English second language classes because I couldn't communicate in English when I started school, so I got held back because I couldn't communicate in school. And I had a really hard time with this, so I had a really hard time reading. It took me a lot longer to read when I was in school, and I didn't like it because it was hard. Yeah. Nobody likes doing what's hard.
Yeah.
Like it's easier to do what's easy, right? And but I wanted to be a lawyer, but I didn't like anything about reading or composing an essay or like structuring an argument. Like it was not my strong. Like I could do algebra problems like with no notes, like just solve them in the back, you know.
So that's not me. That was not me.
But the reading, and then it was always I told us, I felt like it was a weak point, and like the communication. I was embarrassed because like it would take me a really long time still to this point to communicate my point because I don't know, like my brain doesn't work that way. Like I could, instead of saying one word, it takes me 3 or 4 to say what that one word means. And it took me a long time to find out, like, hey, that's not a weakness.
Right.
That's actually a strength. Why? Because when you're communicating to the public and the average consumer doesn't know what the heck you're talking about. Right. But if you can not dumb it down, but break it down to a level where they understand, like the communication, they like it, you know? And
I think that's huge, dude. So it's funny you say that because for me, I sucked at math and I still do. So to go through, the only reason I got a degree in finance was because my grandfather had been successful business person, investor, things like that. And so I was like interested in investments. I didn't know anything about it. I was just interested. So when I saw that the curriculum, like the classes you take in finance are like these investment classes and securities analysis and all these, I'm like, oh, I want to do that. But in order to get to that end goal, I graduated high school, dude, with geometry and 3 years of consumer math. So when I went to college, I had to like take so many classes, math classes, that didn't even count to get to the place where I could even get into the business school, right? Where I could actually get to what I really wanted. But I think your point about the struggles and that little story about kind of overcoming those math challenges to get to the end point is like, you have to just kind of push through when you see what you want. And then coming back to what you were saying, I think I always like to say I'm a creative analytic, like a people person who loves numbers. I don't really love numbers. I like data and I like kind of seeing the pieces of the puzzle. But if you love people and you care about them and you want to do right by them, right? And you want to generally feel like good because I'm trying to help Eddie. You're like, Eddie has a need. Yeah. What can I do to figure that out and bring a solution that can really protect him and his family and his business or whatever? But then what are the technical things that Eddie has going on, numbers wise? What are those pieces of the puzzle? So it's like a really, like, if for people out there, like if that's your personality, like you love people, you enjoy a little bit of challenge, a little bit of number, like, I mean, that's the beauty of insurance. Like, we are really, truly, there's no other industry that you have a problem and you get restored, right? If you know, that there's just, that's what insurance essentially is. I mean, there's exclusions and there's, yeah. I mean, there's obviously not everything is covered,
Yeah.
you know, and sometimes that frustrates people because they think everything's covered, but it's not. But that's to me, like, if you love people, you love numbers, and you love really truly like bringing value, like, it's the beauty of our business, right?
Yeah.
So, yeah.
So I have this debate with everybody, like, college, no college, apprenticeship versus college, you know? Because I didn't go to college, like, I barely finished high school, you know? I left in 11th grade to go, like, work in an insurance office.
Yeah.
I hated school. But so we have this conversation about college, and college is not for everybody, my opinion. But if you want to be the architect, the engineer, the doctor, the lawyer, yes, you have to go obviously to college, right? And for those that went to college and now, for example, are in like sales, like, well, why'd you go to college for? To work in sales? I think there's along the way, we pick up these skills. So why do you go to college? Well, you go to college to prove, just like in math, that you're capable of a higher level of thinking. And hopefully you can come up with like out-of-the-box solutions because you've gone through this experience. But then also something that's helped me a lot is the friends that you make in college are totally different than the network that you had when you were in high school. Mm-hmm. When you're in high school, your friends revolved around sports and whatever the other interests you had in high school. When you are in college, especially like if you live on campus, I never did that, but maybe you're a little bit more involved in politics and like the social problems of your community, and you just make different friends that like take you to the next like level.
Yeah, dude. I mean, so formal education, right? Whether that be apprenticeship, whether that be college. The way that we kind of, my wife and I kind of position it with our kids is that your college degree, or you could say an apprenticeship, or a specialization within trade, these are keys to doors. So the reality is that in life is like, you're going to come up to many different doors in your life, doors of opportunity. And you're going to pull out your key ring and you're going to be like, frick, I don't have the key to unlock that door. So you're never going to get the opportunity to step through the door and figure out what's on the other side. Yeah. That to me is what a college education is about. It's plus the network, like the critical thinking. I mean, the other piece of a college education is that it's a structured exposure to lots of different topics. So sure, you could go study English on Khan Academy, and you could take a calculus class on Khan Academy, and you could go to YouTube and watch something about debate, and you could learn about AI, and you could do a biology video on YouTube and jump over to somewhere else and read something on it. You could do all those things. You could find out anything and learn anything you ever wanted to know without a college education. The difference is that it helps you kind of focus and it brings you structure, right? Now, the question becomes, what's the cost to benefit? Because some people just go crazy and they get into an Ivy League and they spend $300,000 and they walk out with a job degree where they can make it $35,000 a year. That's where I struggle a bit. It's like you have to kind of look at cost benefit. But, you know, the lifelong, like a formal education, I think is important, but at the same time, the desire to have an entrepreneurial spirit. This is the beauty of like where we're at now in life, is that, gosh, man, I mean, if you want it, there's so many different options for people, right?
Yeah.
And so much of like coding and different things like that, like you don't need a degree to learn JavaScript or Python or, like we were talking about earlier, like to learn Final Cut Pro or Adobe Premiere, like if you want to do editing and things like that, like you have to go apply yourself and actually learn, and you can take classes and stuff, but anyways, yeah.
So, I think you know this about me, but before I opened my agency, I used to own a restaurant.
I think I kind of remember that. Yeah,
So
I kind of do.
this was like 2007. Maybe.
Okay.
I was 23, 24, somewhere in there. No clue, like anything about the restaurant business. I never even, as a kid, worked at Carl's Jr. or any of these like high school jobs. My mom wouldn't allow it. But I wanted to own a restaurant. And I looked at like coffee shops because coffee shops were starting to get popular at that time. I looked at ice cream because Cold Stone was like entering the marketplace at that time. And I couldn't find the right opportunity, and then I found this restaurant, right? So I tell people this was my college because I was 23, 24 years old. I thought I knew it all.
Yes.
And I didn't understand business. Yeah, I'm still learning it.
We all are.
Yeah, I'm still learning. But I thought I knew it all, and I had some money, so I'm like I'm gonna take a shot, But yeah, that was my $300,000 college.
Yeah.
To be honest, it was more like I don't know if this came up in my background check, but I filed bankruptcy shortly afterwards. And I had like an $800,000 bankruptcy. It wasn't like I swung for the fence and I missed big time.
Yeah, man.
Like big time miss. But that was my college, So I understand what you're saying. And then what also the reason I say like the different friends and communities that you meet like in college. When I started my insurance office, my background was non-standard.
Yeah.
So these are people that have tickets, accidents, that don't have a long history of insurance, that the insurance industry considers high-risk clients, right? This was where I came from. So these people, my referral partners, were car dealerships. That was my main source of referral, car dealerships. Because so often the first-time buyer shows up to a car dealership and doesn't have insurance.
Yep.
And they cannot take delivery of the car until they have insurance. So here's Eddie, insurance guy, call the insurance guy, right? And I dominated that market, for a long time. But those people, they don't always make the best clients because the instability of like buy, cancel,
Yes.
and that's not really what we want in the insurance market. We want stability over a long time, right?
Right.
And in insurance, we talk about like having so many policies per household, right? We want the house, we want the cars, we want the life insurance, and so we want all those things. Well, when your clients are 20-something years old with tickets, accidents, DUIs, and they only have the one car, they don't necessarily open the doors to referrals from the 50-year-old business owner.
Right.
They're referring that client, right? They're referring their buddy.
It's birds of a feather, right? The people flock together. Same people hang out with each other.
Yeah, the buddy that has the DUI or the tickets or that drives that 370Z or whatever the hot car is at the time, right?
Yep.
That nobody wants to insure. And I had a really hard time, like, okay, how do I go from this to now the homeowner with 2 or 3 cars in the driveway that needs life insurance? How do I get to that?
Yep.
And what I came up with is like, okay, we need to like stop, like regroup, and then go to a new group. Like we cannot keep on continuing this relationship with the car dealerships because they're not leading us to customers that we want.
Right.
And I had to regroup into like a different group of friends. Like now my friends are like me. They're 30, 40, 50-year-olds that own businesses
Yeah.
that have one property or more, that maybe have a boat or a motorcycle or some other thing. And they refer me those kind of clients.
Right.
So that was,
I think it's huge, right?
yeah.
Well, I think, so let me just step back and then come back to this.
Good.
So like, just for context, right, like, I mean, we, my role is to try to help our member insurance agencies grow and develop their agencies, right? With whatever resources we can. And so
let's back up for a second.
yeah,
So we met because when I was first starting my office, I wanted to be able to offer Nationwide, Mercury, like all these big name companies, and they were looking at me like, yeah, we don't want to do business with you. Like you call us like in 5 years, you know?
yeah,
And I'm like, well, how am I going to compete with people that are selling Nationwide and all these kind of companies when I don't have those? Like, I'm not going to be able to compete.
right,
So then I started looking online for options, and then that's how I reached out to you.
yeah,
Somebody referred me to you, and they called Tony, and so the way we met is through Take Alliance.
yeah.
So Take Alliance, what would be the right word for it?
I would just say like the easiest way is probably for most people to understand is just that we're a kind of a membership-based organization, right?
Okay.
Kind of a master agency technically, but that doesn't really mean much to anybody.
Yeah, so for me, what it did is it, like I'm a big believer you have to pay to play, you know, and you can apply that in many different ways. Like if you're somebody that I want to do business with, I've probably taken you out to lunch, or bought you donuts, or coffee for your office, or something for the girls in your office.
Yeah,
Like I'm paying to play.
yeah.
I'm trying to, unfortunately, like buy my way into your
Win their
office, right?
business, yep.
Yeah, and it's the same thing. Like with here, we're gonna pay to play, right? You opened the doors for me for a lot of relationships
Yeah,
with carriers, and then, like you said, the network, like all the knowledge.
yeah.
Like I still do, but I would call you a lot more before, just to like pick your brain.
It's fun. I mean, you're right. It's fun. Yeah. Yeah. I mean, that ultimately, you know, in the world of, I know we're jumping around here, but in the world of property and casualty, auto, home, business insurance, you know, the insurance companies, and right now we're in an especially hard cycle, right, in California specifically. Countrywide, it's, you know, the market kind of goes through these ups and down cycles. But we're in a very hard one right now, and we can get into that later if you want to. But that in normal times, quote unquote, when companies want to write business, want to grow, that's where a lot of our benefit comes, right? Because we have the relationships with these insurance companies, and so as a group collectively, we're stronger together. And so we're able to bring more opportunities to our members, right? But, you know, we have long-term relationships with you guys, so we're not for everybody. Just like you were saying, you know, you had to pull back from the dealership and say like, okay, I want to go here. We have the same thing, right? We're very selective about the members that are in the group, and we try to make sure that we're aligned well with, okay, what can we do and what does the member need? And like we were talking about earlier, bringing solutions. Can to try to facilitate that, but that, yeah, I mean that's really what I love. I mean, that's for me. We're talking about being a, you know, creative analytics or people that love people plus numbers. That's the fun part for me. I get to work with you guys, you know, every day, and you guys are all entrepreneurs, and there's all kinds of business problems, challenges, opportunities, and it's just everything's. It's not boring, even though it's insurance.
Yeah.
It's far from boring.
Yeah. No, so what I've come to enjoy the most and appreciate is that we're in a room with a lot of like-minded people, and we're all on different levels on our journey, right? A lot of us, like you were saying the other day, we're in that $1 million range, you know?
Yeah.
Most of us are in that range. But then you have other producers who have like 100 producers, or
Yeah.
agencies that have like 100 producers in our
Yeah.
group that are like multi-million-dollar
Right.
agencies, and it's cool to be able to learn,
Yeah.
because I know at least for me for a while, like I was stuck. Like, okay, how do I get from this to over $1 million?
Yeah.
Okay, now how do I get to $1 million to $5 million?
Right.
I've never done it before.
Right.
I don't know how to do it.
Right.
I think I know, but I heard this thing a while back. They were talking about Bill Belichick, football. You know? And do you remember how the whole like stealing the plays and all that stuff,
I
right?
remember that, yeah.
So somebody said, like, look, we all have the playbook. Like, we all know, like, what there's film. Like, you don't have to necessarily steal the plays.
Yes.
There's film. Like, we already know the playbook. Like, we already know what's going to happen. Like, it's nothing new. Like, we know what Bill Belichick does. Like, we have the playbook. Like, a bunch of his, coordinators and stuff have left, and we know the blueprint. Like, it's already spread along the league, right? But can you execute the playbook?
Right.
Like,
It's true. I mean, ultimately, I think that's such a huge point, because sometimes too, like, people will be like, "Oh, I don't want to tell, like, if I'm doing something for Mark, I don't want to tell Eddie what I'm doing because he might steal my idea and then he might be more successful than me." But the reality is that most people, whether it's students, whether it's business owners, whether it's employees, don't execute consistently at a high level. So you could give them the whole playbook, and most people, they might dabble, but they won't actually execute. And that's the difference. I think that, I mean, the beauty is in the group, right? We have a variety, right, of different members at different stages of business, different sizes, shapes, everything. But that's the beauty of collaboration, right? Is that if we can all be stronger together, you're not coming from a place of fear. You just kind of be like, hey, I want to keep getting better, right? And the group itself, obviously, we all benefit more collectively, individually, right? If we all do better together. But yeah, dude, yeah, it is a crazy though cycle that we're in right now.
I think, just before we change topics of the group, the other big part of, like, our group is the collaboration that we have with our partner carriers.
Yeah.
Like, the open communication that we're able to have, which, I don't know, maybe in a different setting you wouldn't be able to have that honest conversation. A lot of times, like, I'm sitting with the rep and I really don't want to hear what they're saying.
Yeah.
Like, I don't want to accept it, but like, we're able to have that conversation. Like, this was like more than a year ago, so before this, the whole mess started becoming public.
Yeah.
Like, hey, we don't want business. Like, what?
Yeah.
What do you mean? Yeah, we don't want business. Like, like, what do you mean you don't want business? Like, yeah, we don't want you to sell anything. And I've never had that conversation before, and I don't know.
None of us have.
Yeah, I'm like, what do you mean? Like, are you really telling me this?
No, a salesperson to a salesperson,
Yeah.
right? A marketing rep from a sales company.
And they don't want to tell it to you either because it affects them too. Like,
Right.
I'm sure, right?
Right.
Their numbers are going to go down.
Yes.
So it's hard for them to have it too. But somebody had that conversation with them, and then it's their job to have it with us, and then it's our job to have it with our team.
Yes.
But yeah, how often do you get to have?
Yeah, I mean, I think, dude, one of the things that I've tried to facilitate within the group, within the members, within our relationship with all the insurance companies, vendors, whatever, is just none of us are perfect, right? We all make mistakes. We're all just trying to do the best we can, but to be open, transparent, honest about what the facts are, right? Like, not what we want them to be, but what they actually are. And not to have a pessimistic view. Have an optimistic, a pragmatic, but an optimistic bent, like viewpoint. But be like, okay, yeah, right now we don't really love how things are going, but this is just what it is and we have to navigate through it. So I think, like, from a foundational level, like, that's kind of always been our operating culture, which does facilitate some of those more open conversations about, hey, yeah, this is really tough. Like, it is especially hard though because, and I don't know if we want to get into this topic or not right now, or something else, but the COVID, not the virus itself, but just like the reactions that everybody had, right? Governments, people, businesses. everybody's like just going along. Like if you have just like a EKG monitor, right? It's like just a nice steady thing, and then it goes crazy, and then we're like kind of back to normal. And like that 3-year window of time, obviously just caused all kinds of ripples and ramifications to all kinds of industries, but especially for insurance, because number one, insurance is a direct reflection of the underlying economy, right? Or the actual risk itself, your cars, your business property, all of it. But because we had that period of time, you had costs that kind of started going up because of supply issues, right? Global manufacturing shut down, so things just got harder to get, and everything, prices went up, availability went up. You had 2017 and 2018, we had big wildfires here in California. So 2019, 2020, like the insurance companies lost billions of dollars. Those 2 years alone wiped out like 20 years of underwriting profit, right? So 17 and 18 wiped out 20 years of the little bits of underwriting profit that the insurance companies had kind of generally made over the prior 2 decades. So coming into COVID, like the market was already kind of struggling a bit in property in California, because you had wildfire, then we have COVID hit, you have supply chain issues, you have like regulatory changes, right? Because maybe well-intentioned, just we didn't have a lot of rate increases over those roughly 2.5 to 3 year period. So you had costs rising, you had climate change issues, the wildfire issues, you had supply chain issues, you have all these things. The rates aren't going up, consumers aren't paying more, but the costs are going up, the claims are rising. And so, like, my point is that window of time had so much static that now we're on the other side of it, but it's like we all were just walking along, bam, fell in like a 100-foot hole. And we're looking up and we're like, oh God, I gotta get out of this hole. We fell in the hole that fast, but now we gotta climb out. And it's like, it's wide enough, it's narrow enough that we can spread our legs out and arms and like slowly grind our way up to the top of the hole. And that's kind of what we're doing right now, but it's gonna take a few years, right, to get actually out of that hole that we built, that happened in COVID. But anyway, sorry, that was a rabbit trail, but.
It's okay. One of the questions that we get in our office all the time is like, why is my insurance going up? I didn't have a claim. Right. I have a good driving record. Or my house, there's nothing wrong with it. Why am I having a claim? Or why is my policy going up now? And it's a sensitive topic.
Yes.
And it's not that easy to explain. Like I was telling you earlier, one of the things that I tell them is, well, do you want the long story? Or do you want the longer
right.
story? Because it's not a short answer.
Right.
So the principles of insurance, like the law of large numbers, and I break it down. I'm like, look, insurance is you take a little bit of money from a lot of people to cover the claims of the masses, right?
Yep.
And when that little bit of money isn't enough, well, they have to collect more, right? And that's sort of what's going on. It's not specific to you. In the past, this was most of the calls that we got in our office. This is like 5 years ago, right? Hey, I have so-and-so insurance company, my rates went up, can you find me somebody else? And that's how most of us got new clients.
Right.
And now, when we get those calls, it's just stay where you are.
Right.
It's that little thing where money from a little bit of people, a little bit of money from a lot of people, it's not just specific to yours now, it's the whole industry. So that changing, it's not happening right now. And I think that's one of the frustrating parts.
Yeah, I mean, so again, I mean, if you are a consumer of insurance or a business owner, whoever you are that's listening to this or watching this, to Eddie's point, the long or the longer answer. So I'm going to try to make it as short as I possibly can. But so just a little nutshell here. If if we just like distill everything about insurance, what do we need in order to actually offer somebody insurance? What is insurance? Insurance is trying to charge the consumer, the business owner, a certain price for what you project will be the future loss potential, right? Well, in order to make that promise, what do you have to have? You got to have money. You have to have capital, right? If you don't have capital, if you don't have proper money at the base, then you can't make promises to pay. Otherwise, those are just lies. You're not going to be able to pay. So when you just come back to two basic things, right? Insurance is a promise to pay. It is a spread of risk among a pool, like you said. You know, if Geico's got whatever, let's just say in California, maybe they have 2 million policyholders, right, with auto insurance. They have just a massive pool of risk, right? So maybe in any given year, 5 to 8% of the people are going to have claims. But those claims are more expensive now, right? A Tesla is a lot more expensive to insure than a Toyota Camry or fix. I mean, not insure. It is more expensive to insure, but that's because it's more expensive to fix. You know, Farmers or State Farm or Allstate or Travelers or Nationwide or whatever, you know, Mercury, like if they've got millions of homeowners, and well, let me come back real quick before I jump to property. Auto insurance during COVID, right? Used cars went up 42%. During COVID, from about March of 2020 to roughly like somewhere around 2022, right? Auto insurance rates didn't change much. They didn't go up much. In fact, very little. So if you're just, think about this basic, right? Like in isolation, like if I'm paying $1,000, $1,200 a year for my auto insurance, but the cost, and then I go total my car, but the cost of used cars because of limited supply and availability went up 42%. But my insurance company wasn't able to change my rates at all. In the face of those rising costs, this is one of the challenges for our industry, right? We're a regulated industry. And you and I were talking about this a little bit before we started recording. If my cost of carne asada, I loved your analogy, like from your restaurant background, like if the cost of my carne asada burrito that I'm selling to Tony, because I love carne asada, by the way, like if it cost me $3 to make it and I'm selling for $6.99, but now my beef went up and everything components of that, if it costs me now $7 to make, in our end, you would just change your prices. $10 burrito, $11 burrito.
Which is
right?
happening.
Like bam, bam, it'd be done.
Yeah.
So immediately those costs are reflected. In insurance, it's regulated in California. The insurance companies have to get approval to raise the rates beyond this, you know, they have to get approval. So there's no quick reaction. It's not like the special forces can just drop in and rescue the prisoner and get out. And so in that example of auto, when you have 42% cost, granted they've come down a little bit, but they're still probably 30+% above where they were pre-COVID. Those costs have to be reflected, but they can't, it has to be regulatorily approved. Okay, well, in your burrito scenario, what if you had a call from some government agency that, we'll just say, I don't know who regulates that, but let's say the FDA. It's not the FDA, but
Yeah.
and they're like, hey, Eddie, no, dude, you can't raise your prices to $10 on your burrito. You got to sell it for $8, or keep selling it for $6.99.
Yeah. Unemployment's up, inflation. Like, you can't raise your price.
You can't raise your price. At that point, what do? If you're the seller of carne asada burritos, or you're the seller of auto insurance, or you're the seller of home insurance, if you cannot reflect at least to stay break even, right? If your costs are more than the actual sales price, then you're going to say, I don't want to sell more burritos. Like for right now, we're not going to answer the phone. We're gonna lock that front door. And so if you think about Geico, right? If you go back to earlier this year, Geico had closed their field offices. Well, why would Geico do that? If they don't want to sell more insurance, they don't want to have more sales force. They don't want to have more production. They want to have less, right? Until they can get their costs and loss, like the expenses and revenue, until it can kind of come back into equilibrium. And that's why I go back to, and I'm not throwing stones or blaming anybody, right? There's a lot of different factors that have happened. But I come back to the analogy. We're just the EKG. We're just going along, beep, 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 beep. And we're all just now dealing with that fallout, right? And so the system has to just completely recalibrate itself, and that just takes time. One other quick comment, which people, again, normal, those of us who are paying our bills, our auto insurance and home insurance bills, we don't think about this, but the way that insurance companies reflect, like if you have $1,200 a year, right? $100 a month you're paying for your auto insurance or your home insurance. As you go through the year, the insurance company doesn't consider that they've made $1,200 off of you. It's they're earning their money from you month by month, right? And so if they do get a rate increase, it might take a year or 2 years for them to actually get the benefit of all of their clients paying their bills and actually getting the revenue back to where their costs and revenue and expenses come back into line. And this is why once you get behind, once the costs to break evens get out of whack in insurance, like in homeowners, it just takes a long time to get it fixed, right? And obviously we have wildfire. There's other issues going on that have additional pressures beyond just that cost thing that I was just kind of talking about. But
it's not like I keep saying, it's not a short answer. It's a really long answer.
It is.
And you can go into hours of it. It's another example that I use too. Is I get this question a lot. Well, I was paying, say $100. I was paying $100 a month, and why is my insurance going up instead of down? Isn't it supposed to go down? Well, does the price of milk go down when you go to the store? Does the price of gas go down when you go to the store? No, nothing goes down. In most cases, what I tell them, it's cheaper, which is why we tell you, it's cheaper if you stay with your company.
Right.
And even though the price is higher, believe me, if you were trying to buy a new policy from them, the rates would be much higher.
If they could get it.
If they can get it, yeah. So even though your price is maybe a little bit higher than what you were paying before, it's not as the same price as if you were to buy it new from your insurance company. It would be a lot more. So yes, theoretically, it is cheaper, but it's not going down. It's not going to go down. It's never going to go down, as long as everything keeps on going up. You didn't mention, I know, labor. It was so hard to find people to work in my office during COVID, and the price of labor, it went up, because I don't remember what wage was back then, but now, if I want to get somebody just to answer my phone, it's $25 an hour. Just to answer the phone. There's no technical skills. We're not even got there yet.
Absolutely. Yeah, and again, this for the consumers of auto and home insurance, renters insurance, whatever, and business owners, workers' comp, your general liability, property. That is 100% right. Every cost input, right? Whether it's minimum wage increases, whether it's lumber going up, whether it's the used car prices, whatever it is that's a change in that cost input, that ultimately, when there's a promise to pay and then there's a claim, your employee gets hurt and they got to get their work comp, or somebody slips and falls on your business premises and they sue you and that goes to court, and now the jury's awarding a much bigger, payout than maybe they did 5 years ago. All of those costs have to be reflective of actually the cost that you're paying for insurance, because the business otherwise doesn't work, right? Like you can't, if you don't have enough money to pay what the rising costs are, then you have to stop making promises, right? And that's why, like, to your point about, hey, if you have auto, home, business insurance right now, like, and your rates have gone up, like, just pay the bill. Just for right now, we're in, because of all these dynamics we're talking about, we're in a capacity. We're in a crunch, right? Where insurance companies, they're being very careful about how much new business they want to write, right? So for right now, pay your bill. Experts like Eddie, right? Like with the solutions that he and his team bring, I mean, the reality is like they're trying to service you and take care of you. Our options as agents are very limited right now. I feel really bad for agents who are on the other side of the world, in the exclusive side, where they only have one company that they represent. Because we know how tough it is for us, and we have many companies. But for our clients, we're just telling them, hey, stay put for right now. In a year from now, as this market slowly grinds out of this, we climb out of this big deep hole we've fallen into, little bit by little, as that gap changes and the insurance companies feel more comfortable that the rates they're charging, that people are paying for their future promises, that's coming in line, insurance going to be like, okay, I feel like we're kind of out of the hole now. I'm going to start writing a little bit more business. And at that point, then consumers are going to start to have more options, right? And ultimately, obviously, none of us want to pay more for insurance, right? And we're in the business, and we don't really want to. We don't get a discount,
Yeah.
right? There's no insurance agent discount. I wish there was, but there's not. So we're right in there with all of our clients. We're in the same boat. So I don't know, dude. I think we just have to encourage the clients. Hey, this is just kind of what it is. It's not fun, but ultimately, yeah, dude. I mean, nobody should assume that insurance is going to be cheaper, because the underlying base that insurance is making promises over is rising. Little bit by little bit every year.
Yeah, and I give people this example. 15 years ago, I was paying like less than $100 a month for my health insurance.
Yeah.
I just got a notice a couple of weeks ago that in a few weeks, when my health insurance renews for next year, it's going to be $700 a month for just me. I don't have a family of 5.
Yeah.
Just for me, my health insurance is $700 a month.
I know, dude.
And do I switch it? And I went. I have an agent for my health insurance policy because I'm not an expert in health.
Yeah.
So I sat down and I reviewed it with her, and she's like, "Well, you can change your policy." And I'm like, "No, I don't want to take off any of the stuff that I have." So I'm kind of just stuck paying $700 a month. You mentioned something that I want to just touch on real quick, because a lot of people don't understand capacity.
Yeah.
Do you mind getting into that real quick?
Yeah. So, I mean, it goes back to what I said a few minutes ago around the very, very basics of insurance, right? Being capital, you need money. Well, capacity is just another word for appetite, desire for growth, either more or less, right? But what ends up happening, and there's, I don't know if we want to talk about reinsurance at all a little bit. The insurance companies for the other, they're the insurance companies for the insurance companies.
That's where I was headed.
Okay. And that's a very important thing that hasn't really been an issue for us in California for a decade or more, and I'll explain why in a sec. But basically, capacity is just essentially, it's a form of, in a way, it's a form of leverage, right? Like if if I have $1,000, or let's say I have, $100 million, if I'm an insurance company, I have $100 million of capital. That $100 million allows me to insure X number of properties, a certain amount of exposure. It's not sky's the limit, right? Because if whatever I write, if I start to have claims, I need to be able to pay those claims. So what ends up happening though is as the cost of money has gone up, right? Interest rates have risen. We've had tighter monetary conditions. Like that either makes getting more capital, more money, either easier or harder. But one very important thing, California is, and again, this is a little, sorry, anybody listen, this is a little geeky, but California is the only state in the country, to my knowledge, that does not allow our regular insurance companies, the Farmers, the State Farms, the Travelers, the Mercuries of the world, to charge us for the insurance that they use to help kind of make sure that they're solid, reinsurance. So this is kind of a very behind the scenes thing, but just to keep it super basic, like in the last roughly 12 or so years, right? Reinsurance buyer, right? Like it would be like, hey, I'm paying Farmers my premium for my home insurance, and then now I've got $1,000 deductible, right? And I pay a certain amount for that. So I've protected my house, I've paid a certain amount, and I have a certain deductible. For the regular insurance companies like Farmers and Travelers and Mercury, they have a functionally, I'm very dumbing this down, but functionally the same type of a thing. Hey, I've got a whole bunch of risk that I need to reinsure. I don't want to keep all this risk. I need to actually pay another insurance company, a reinsurance company, a certain amount of money, and I have a certain deductible, right? And I'm going to get a certain amount of coverage. What that does is when the regular insurance companies are able to reinsure, it allows them to write more business, right? Because they've taken a portion of the risk of their capital and put it over here to a different reinsurance company. And this is the way the whole industry spreads the risk, right? This is good for the consumers, it's good for business. Well, here's the problem. In the last 2 years, property catastrophe, what we call natural catastrophe property reinsurance, right? So wildfire is a catastrophe, right? Just like flood or tornado and hail and things like that. In California, in the industry, the rates for reinsurance have gone like parabolic. They've gone up like 30-40% in the last 2 years. So again, we come back to the carne asada burrito analogy, right? The cost versus the sales price. To the regular insurance companies, reinsurance is a cost. Their beef just went up 30%. But in California, that can't be passed on. That can't be charged to the consumers. So again, if you have a major jump in cost, and again, I'm being very generic here, okay? I'm like, the people who are experts in all of this would be like, Tony, yeah, technically this and this, but I'm trying to paint a very general picture, right, of the trend. And so what that has done, man, is like the primary insurance companies, the Farmers and State Farmers, Travelers, they haven't been able to they can't offset that. And so therefore they're like, hey, if that means I've got to keep more risk, and I'm having to pay more for this, and I can't pass it on. Therefore, my cost, claims to premium, sales expense to revenue is out of balance. And so these are, again, this is kind of a geeky insurance thing that most people don't care about or think about, but it's an important thing that actually is one component of why California is kind of struggling right now in the property market. Anyways.
What I do to explain this is, so let's use car insurance. Okay, so what I tell people is, technically, you don't have to buy car insurance. If you have $35,000, you can go and deposit it, and you can be self-insured. Uh, I don't know anybody that's done that.
No.
Most people decide to buy insurance and transfer that risk to somebody else.
Yes.
It's cheaper for me to pay a couple $100 to have a $500,000 worth of liability insurance or $1 million of insurance, whatever that number is, because everybody's number is different. It's cheaper for me to pay a couple $100 and have $1 million of insurance than for me to take $35,000 and deposit it into the bank.
100%.
Would you agree? Yes. Okay. So if you don't want to do that, what makes you think the insurance company wants to do that? They don't want to use their money either.
Right.
They rather use somebody else's money and pay whatever the premium is on it to do business, just like you wouldn't take $35,000 for your car insurance, or just like you wouldn't take $1 million for your house, maybe. You'd rather pay whatever that couple $100 is and use somebody else's money instead of your own, and that's sort of what I tell people.
No, I think it's a good analogy. I think, essentially, insurance is just the reason we would buy insurance, right? Life insurance, auto, home. Sometimes it's mandated by law, like auto insurance. You've got to have it. So if you don't have the 35 grand to go post it with the state or whatever to say, hey, I'm self-insuring, which is nobody. Technically, there's people out there that could, but nobody does it. Like, ultimately, all insurance is the reason I buy insurance is to transfer the risk that I can't I'm not willing or I can't afford to bear, right? When something happens catastrophic, right? It's why if you're married and you have a mortgage and you have kids, you should have life insurance, right? Because it's a catastrophic risk, right? That if something does happen to you, the people you've left behind and the liabilities, those need to be dealt with, but most people don't have $500,000 or $1 million sitting in the bank to cover that. So some people can self-insure, but the vast majority of us can't. And so the reinsurance piece, definitely that's a component of it. It really is like, in order for an insurance company to continue growing, right, they have to keep managing the risk that they retain on their books, and the more they can kind of spread around, then again, it's not a bad thing, it's a good thing. It just diversifies the entire kind of financial protection layer that insurance as an entire industry is for all of us who are the people who are the buyers, right?
And you could, anybody that wants to look it up, you can go on Google and look it up, but the Dobbs fire, there was an insurance company that took on a lot of that risk, and they ended up, it was bad. For them, because they absorbed all the risk from that one community, and they got hit really hard because they didn't spread it out.
Yeah, this is another important point I think that we're dealing with in California, because sometimes people will be like, why is my insurance company non-renewing me? Why are they canceling my home policy, right? I didn't have a claim, there hasn't been any wildfires in our area or whatever, but just like a stock portfolio, in a way, if you have a company that's in your investment portfolio that's just gone haywire, do you want to keep investing in that? Maybe, maybe not. But at the same time, you're looking at the total portfolio return and the total risk. And so it's the same thing with insurance, where these insurance companies have to look at their concentration of risk, which is to your point, right? Like, if they have too much property insured in one area that's exposed to potential different wildfires or different things, just generally speaking, even if it's not wildfire exposure, they don't want to be too concentrated in risk, right? Where if one event happens, like, wow, we just lost, crazy amounts of money. And so I think like that's another element, like companies are trying to balance their portfolios, if you will, in California with all these other external factors that are going on with the cost pressures, but yeah.
People don't like hearing this, but I think it's the hard truth. It's for the consumer, and we're all consumers of insurance. It's gonna get a lot worse before it gets better.
Yeah.
Property, right? So the California Fair Plan, I read that it's like at 248% or something. and they put a cap, right? They will not allow it to increase more than 100% beginning next year, but 100% is still red.
Yeah.
And they're trying to figure out, how do we transfer this risk to private insurance? Okay, well, in order to do that, you gotta get the price right. Okay, so what's the correct price? 250% above what the California Fair Plan charges for insurance companies to accept it? I
Yeah.
don't know. So then back to the example of health insurance. I'm paying 700% what I used to pay
Yeah.
10 years ago. Is that what's sort of headed for PNC? You know, that type of increase, because they're getting forced to take stuff that they're not comfortable with, so they have to charge the right, like right in health insurance, people don't want to insure you if you have a history of diabetes or all these underlying conditions, but they're forced to,
Right.
and they can't ask for it,
Right.
and they cannot factor that into the price. So now property is, they're going to be forced to do it, and who knows how the factoring of price is going to go to. But that's sort of what we're heading towards, right? And I tell people, like, brace yourself. You know, like, I deal with a lot of lenders and realtors. And for the longest time, when a lender would calculate rates, it'd be like $60 a month for their homeowners insurance. And what I'm telling them is now, you need to factor in $250 a month when you're calculating your ratios. And I always reflect back to this article on Bankrate. The national average cost of homeowners insurance for a $250,000 dwelling is $1,400. So compare that to here in Temecula,
Yeah.
where the median price is in the 700,000s. So 250 times 3,
Yep.
1,400 times 3, it's $4,000.
Yeah.
We're not there yet,
Right.
but we're heading there. And that is sort of when this will start to turn around.
Yeah.
And people don't like to hear that, and like, that's what I think. I don't know.
No, we don't have crystal balls. What I will say is that California has skewed historically on the lower end of all the states, right, for home insurance, and was about middle of the pack for auto insurance, right, for average rates. Just to your point, I think like Florida is like almost $5,000 average premiums, or something like Texas is not far behind them. So yeah, we're going up, but again, the market values of sales prices of homes, they're up and down. That's not relevant to insurance,
Yeah.
right? A lot of people,
Yeah.
the consumers or business owners listening to this would confuse that, but it's really it's what the actual cost to rebuild your house, right? Those costs are up, and so that price has to be reflected, and it will eventually. Again, it's delayed impact, right? Because people may be like, well, why are the rates going up now? Well, we had a few years with not as many rate increases, and the costs went up, and so now some of those are being approved, and they need to get through and get in the system, and so I feel like the next, like 2024 into 2025, there's a lot of work being done on trying to figure out the reforms and what can be done to, by the government's looking at things, associations or state industry associations are looking at things, trying to figure out, okay, well, what can we do to try to make it better? But if you rewind all the way back to what we were talking about earlier, the cost of everything is just structurally higher, right? So even if we didn't have wildfire, even if we didn't have reinsurance, even if we didn't have all these other issues, just the pure cost of money and capital and everything else, it just costs more. And so we, as consumers, we just have to realize that it's gonna be more expensive. The whole issue of the FAIR Plan and availability of insurance, there has to be some reforms that happen in California to try to make it to where the regular insurance companies can write enough regular, good, not wildfire exposed business at the right price to where there's the ability for the FAIR Plan to kind of not be running in the red, so much.
Yeah.
You know, I don't know, but the rates have to go up because those exposures are, you know, they're high risk. You know, it's tough.
I was on the Zoom call with commissioner and I think it was NAR or CAR, one of the realtors associations.
Yeah, yeah.
And they're drilling them like, what's going on? Give us more information. Like, how can we prepare ourselves? And what they talked about was all the tools that are now available to insurance companies to analyze risk properly. And like, sad to say, but there's a lot of homes that were sold that were in bad conditions.
Yeah.
And a lot of, especially new homeowners, don't understand that there's maintenance involved with owning a house.
Okay.
You have to update your roof so many years. Like, you should be inspecting it.
Yeah.
You should be servicing your air conditioner. And all these other maintenance things, just like how you change your oil and rotate the tires on your car, you should be doing the same thing for your house. And unfortunately, so many don't. And there's so many claims that are really maintenance.
Right.
You know, like, oh, the roots of my tree went into my cement and my cement is lifting. Well, you have an overgrown tree.
Right. Yeah.
Like, there's a lot of maintenance stuff that, you know, unfortunately they're not educated. Like, they don't know, and they're learning it the hard way.
Yeah, and insurance is not a maintenance policy, right? I think this is also a point of confusion that people have, is that insurance is for what is sudden and unforeseen type of a thing. That's not the technical language, but your pipe breaks, you have a water damage. Not you knew you had a leaky toilet connector that has been dripping and dripping and dripping and dripping for months and months and months, and you never did anything about it, and then eventually the pipe broke and then it floods. I mean, if it could be determined that you didn't take care of your roof or your roots or things like that, like, that's not what insurance is for, right? It's for the fire, it's for the theft, it's for the big water damage that happens. And I think, like, that's one of the things I think that's changing in the industry too, is when you're in times of where it's harder, right? When profitability is harder and the costs and the premiums are out of whack and all that kind of stuff, more diligent underwriting is being done, right? Meaning the insurance companies want to know that, hey, if I'm making a promise to pay if you have a claim on your home, but then I find out, wait a minute, your home has cracked driveways from tree roots, and the roof is looking a little bit like dilapidated over here, and you've got trees hanging there, and like, kind of trashy stuff parked on the side, like where it's clear that the pride of ownership, the home maintenance, is not being done. Insurance companies are looking more strictly at that, right? So I feel like, because they should always do that, because and just like anything, there's a price for everything. If you're a good risk, you should get the best pricing. If you're a more risky risk, you're sitting in you have a cabin in the middle of the mountains, surrounded by forest, you should pay more than what Eddie pays for his house that has no brush. Like that's just risk to rate. But yeah, that maintenance piece of it, I think, you're right. Like, a lot of stuff got sold that wasn't in the condition it needed to be.
Yeah, I got into this back and forth with a customer who had a leaky air conditioner, and so she calls the office first because she wants help on the claim, and I'm trying to explain to her, like, look, your leaky air conditioner isn't covered. And then she's upset. She's like, why do I pay for my insurance? And this is BS. And we're going back and forth, right? So I asked her that question. I'm like, hey, what kind of car do you drive? Like, oh, it's a nice car. And we start talking about her car, and she sort of calms down. And have you had to buy tires for it? Oh, yeah, they were expensive, yeah. I'm like, well, why didn't you file a claim on your car insurance? And she just sort of paused, like, I can do that? Like, no, you can't do that.
That's a great question.
Like, just now you can't file a claim because your AC leaks.
Right.
You can't file a claim on your car for your tires.
Yeah.
So it's funny.
It's true. I think, again, I mean, I think as agents, insurance is legal jargon, right? Your policy is just written by lawyers. It's got things that it covers and things it doesn't, right? I think one of the sad things is that auto insurance, through a lot of advertising and branding, was just kind of basically whittled down to, hey, it's just about cheap and fast. But the reality is that for most of us, one of the biggest liability exposures that we have is driving and hitting somebody, and the way that the lawsuits are just piling up and the verdicts and things like that, you can be attached, your wages can be attached. If you severely injure somebody and you have policy limits, like low limit, minimum limits in the California, whatever, you've exposed yourself to big time. And unfortunately, that's where I feel like for us, whether it's home insurance in the air conditioning example, whatever, it's just, that's the beauty of having an independent agent, right? Is like, we work for the clients, we have our insurance companies, but we are legitimately trying to make sure that we're educating them the best we can, if they want to listen. I mean, not everybody cares, most of us don't care about insurance, but you definitely care when you have a claim.
Yeah.
So you want to get it right before you have a claim.
So let's get into that real quick before we wrap it up. Because you said it a few times, the independent versus captive.
Yeah.
Could you explain a little bit?
Yeah. So from the consumer perspective, and again, all great companies, but if you are buying from Farmers Insurance or State Farm Insurance or Allstate, there's others out there, American Family, things like that. You're going to that agent and they have one product they're selling you. So the analogy that I like to use is, if you think about, like, if anybody who has kids, there was that little toy that when your child is very little, it's about the shapes, right? So it's a plastic thing, and you have the triangle, the diamond, the square, the circle, right? And you have the corresponding holes. Well, the way I think about it is, if I'm going to an exclusive agent, so a captive, a State Farm, a Farmers, and Allstate, whatever, I'm basically, every client's a different shape. So my needs are different than Eddie's needs, are different than Chris's needs, are different than anybody's needs, right? Like, I'm gonna try to put that same shape in every hole. Like, I'm a different shape, but where am I going?
Yeah.
Well, so you're only going in one hole, right? But every client has different needs. And so the beauty of the independent is all of our little, different shapes are different insurance companies. We have different solutions, right? We have different options. And so to me, in our modern world, we all want value. We all want good service. We all want to be, know that we're getting something tailored to us that meets our needs, as specifically as possible. And that to me is the power and the beauty of the independent agent. So we represent multiple insurance companies, Mercury and Travelers and Hartford and Nationwide, and on and on and on. And so when that client of a different shape shows up to talk to us, we can find that right place that they fit, right? We're not trying to jam them into one spot. So I don't know. That's a little basic analogy, but that's.
No, it's funny. I use the same thing, the square peg into the round hole.
Yeah.
I use that, but then I take it a step further, and I break it down into direct to consumer, like Geico.
Yes.
The captive and the independent. And what I tell them is, like, just like you said, they're all great companies. There's nothing wrong with Geico. There's nothing wrong with State Farm. And if that's what you like, then that's where you should go, right? If you're the type of person that likes dealing with a call center, then Geico's probably the way to go, because you will never meet somebody in person.
That's right.
If you like to have a person that you can meet with in person and go over your paperwork and have that one-on-one relationship, well, then you want an agent, right? Now, where you go a step further is captive versus independent, right? Do you want a captive or do you want independent? And I use the cell phone thing. Like, I have an iPhone. Shit, I have an iPhone.
You're burning your battery right now too, dude. Your light's on.
I have an iPhone. You have an Android, right?
Yep.
Okay, but when I bought my iPhone, I could have gone to the Apple store and bought my iPhone there, you know? But I didn't, you know? A lot of people do, but I didn't. You could have gone to the Samsung store and bought your phone at Samsung, you know? And just like there's Samsung stores where you can go at your TV, your laptop, there's something wrong with that. Like, you can go to Apple and get everything Apple, right? Most people that I know don't go that route. They'll go to the Verizon store, they'll go to Best Buy, they'll go to Costco, because I can look at a Samsung, but I can look at an Apple right next to it, you know, and a bunch of other phones, and I can like put my hands on it and feel and look at the different options. Where if I went to the Apple store, they're gonna push me Apple, and maybe Apple isn't the right choice for me. Like, maybe like Android is the better choice. But when you're going to the captive, it's like you're going to the Apple store. And again, there's nothing wrong with it.
Yeah.
Like, I still go to the Apple store to get my earphones and stuff like that because they have super specialized products for the Apple. But if I want to be able to look at different things and compare different models, and I want to go to somewhere like Costco or to Best Buy or one of those retailers where I have the options. And if you're that kind of person, then you want to deal with an independent because you have those options available.
100%.
And on the captive side versus independent, a lot of times it's a square peg into a round hole. Like, it just doesn't fit.
Yeah.
And you start to run into problems.
100%. I love that analogy. No, it's true. And that's the whole thing, right? Is like, do you want advice? Do you want options? Do you want service, value, right? Like that's one of the best things that you get out of it, right? Like dealing with the independent system. And again, I think every buyer has their different desires, right? And some people just, price is the only thing that matters, and if they can get it cheapest through, like an online direct to consumer, so again, a Geico would be the biggest, name out there. Then ultimately, like, they're self-serving essentially. They have some service, when you call a call center, but you're never gonna get the same person twice.
Yeah.
So when you have a problem, it's like, you're not calling Eddie or somebody on Eddie's team, you're just dialing roulette, and that for most people in their moment of need is not the experience they want.
Yeah.
Right?
I had this in my office during COVID, actually. And it was funny. It happened like literally back to back customers. Like, I was helping somebody, and then there's a customer waiting, okay? And so there's a company that is direct to consumer and also the biggest in the independent channel, Progressive.
Yeah.
Okay? So that means that you can go directly to Progressive and buy your policy, or you can go through an independent like us and buy your policy. So two customers had a problem with their Progressive policy that they bought online. And when you go to Progressive, you can look for local agents, and we were like the highest rated agent on their platform,
Yeah.
So they both came to our office. So one of them's having a problem with a change they're trying to make, and I'm sort of explaining to her, like, I can't help you. Like, I don't have access to your policy. I can't help you, I can tell you where to go. She's like, yeah, I tried, but she's having problems with it. I'm sorry.
Yeah.
I can sell you another policy through Progressive, but I can't help you with the one that you have. So and the whole time this other customer's like sitting in the lobby waiting, and she's kind of overhearing like what I'm telling her, I didn't know that this customer also had Progressive, but it turns out it's just a coincidence, So then the customer leaves my office, and the other customer, I'm like, okay, how can I help you? She's like, well, I have Progressive, and she's like, I have this claim, and I'm having problems with it. So I now know that she overheard the whole conversation, and she already heard what I've told the first customer, so I don't want to repeat the same thing to her, So I'm trying to think, okay, what am I going to tell her? And I couldn't think of anything smart to tell her. So I'm like, look, lady, are you the kind of person that you want to hear the truth, no matter if it's good or bad, or do you want me to just tell you something? You know, like, no, like I'd rather hear the truth. Okay, the truth is that it was easier for you to buy this policy online and avoid going through an agent like me, and because it was easier, you chose easier. You know, instead of going through somebody like me. And now that you want help, you want somebody like me to help you. But I can't help you because you chose to go the other route.
Right.
So unfortunately, you have to go back on your app and figure out how to get a hold of your adjuster because I can't help you.
Right.
And she's just like, I get it. Thank you.
Yeah.
And just like, I was expecting it to like blow up in my face, but she's like, yeah, I get it. Thank you.
Yeah, I mean, I feel like, you know, for us in our world as independent agents and insurance advisors, you know, it's hard to convince people that value is important, that experience, because once there's no option, there's no option, you know, and so I feel like, you know, we just have to keep working and building, and, you know, we talked a lot about some of the challenges, right? And I know we gotta wrap this up, but I'm very optimistic about California. I'm very optimistic about the future. You know, this is the fourth largest economy in the world now. I think we passed Germany earlier this year. The insurance market, so if you were somebody that wants to be in the business of property and casualty insurance, you know, it's the largest market in the country, and it's continuing to grow even through all the ups and downs. We have a great economy. You know, we don't have hurricanes. Good weather. I mean, like, yes, we have wildfires. We have challenges, but there's just such a bright future, right? And I feel like sometimes we can just get upset with the politics or the regulations or this is going wrong or that's going wrong. And those may all be true, but when you take, you know, the old saying, when in doubt, zoom out. So, if, you know, most of the time we're this close to our problem, you just have to kind of step back and be like, okay, like I said, EKG going along, the eggs got scrambled, we're kind of, you know, doing a little bit volatile, but that's the zoom out effect, right? And you look at that and I'm just like, man, there's so much opportunity, like long term, you know?
And I think that's the key about insurance. Like, it's long term.
Yes.
Like you mentioned, 17, 18, companies had like 10 years of reserves wiped out.
20.
20.
It
Okay.
was 20.
So
not mistaken.
imagine, back to the burrito example, imagine if it's going to take you 20 years of burritos to get back to zero.
Right.
Who would keep doing it?
Right.
Like, not too many of the,
Right.
of the restaurants would be around. They'd start over or find
Yeah.
start selling sandwiches or something, you know?
Yeah.
You
Yeah,
wouldn't be
yeah.
selling burritos anymore.
That's why some insurance companies have left California, because they were like, I can't keep doing this,
Yeah.
right? The big ones, you know, they've got to slow down to speed up over time, right? But yeah, it's true. But anyways,
And that's one of the things that I like also about like our partners. Without you'll know who I'm talking about, but like there's specific companies where they've been providing education for years. You know, social media, new client newsletters.
yep,
And doing workshops, both like in person and in Zoom, and they've been preparing us for like years. Like,
yeah,
it's not like it just started. Like, it's been happening like 5-10 years ago.
right,
I remember going to a workshop where it was okay, like the interruption in the insurance market, right? How are we going to compete with the online competitors? So the room was packed.
yep,
Like, okay, how are we going to compete with the online companies? You know. And the first line to drop was, you're not going to. Yeah, they have like millions and millions of dollars, and you're not going to compete with the online
right,
platforms. But you have to find your blue ocean strategy. You have to compete where they cannot compete with you, and that's the local presence.
that's right,
You have to be the trusted local advisor in your community, and whatever your community is, whether that's church, or your kid's school, or soccer,
yeah,
whatever your community is, like, be that guy in your community and the online companies cannot compete with you. So like compete where they're not, you know.
100%. That's 100%. Yeah, I mean I think ultimately that is where you know the mega companies spend billions of dollars right on advertising to get attention. But again, when the rubber meets the road, nobody likes to pay more for insurance. You're paying because at some point when you do have a claim, you want to be able to have that local agent that can, and a good insurance company that can kind of work through that. It may not be a perfect, claim situation, but help you work through that process and be that presence locally, be the face, be the real value, right? That just doesn't exist in the other, kind of. I mean, it exists. I mean, those companies pay claims.
Yeah.
They have adjusters, they have all that. So they're delivering on their promises, but it's a different customer experience, right? It's just a different level of value.
Yeah.
And again, each client may have a different preference about how they go, but if they go on their own,
Yeah.
that's fine. They're on their own. But anyways.
And there's different applications for different scenarios, right? Like, I'll never have a burger delivered to me because, like, by the time it goes from there to my house, like the bread is soggy and the fries aren't crispy. So I'll have a pizza delivered to me,
Yep.
but I won't have a burger delivered to me. Like, if I'm
Right.
getting a burger, I'm gonna be like there, you know. So different applications to like different
Yeah.
scenarios, right? And same with insurance, right? Like everybody's different, and you just gotta find what works for
Yeah.
you. Tony, anything else that you want to add or that I missed or?
No, we kind of went all around the insurance world and back. I mean, I guess as we close it out, I mean, I would just kind of reiterate that, look, to the business owners and the consumers, the people who are buying insurance, just hang in there with us, right? It's going to be rough, right? For the next year, 2 years, we've got to get out of this post-COVID hole. If you have the opportunity to work with an independent agent, obviously Eddie and I are biased on the independent agency channel because that's what we do, and we feel like we deliver strong value to our clients. But just understand your agents are working hard. They're trying to look out for you. The insurance companies aren't bad. They're just trying to get reflective of the claims versus what they can charge and getting all that back in equilibrium. But we're all going to pay more. It's just, unfortunately, that's the reality of where we're going to be at. And so we're all kind of on this journey together. And I know sometimes it's not fun when we're paying more, but just, those are the things I think kind of, that we should just kind of be encouraged and realize we're just kind of all walking together, grinding through this stuff, and we'll get to the other side.
Yeah.
So.
Definitely.
Yeah.
Thank you, Tony.
All right, bro.
All right.
Thanks, man.